John, you've called these markets bifurcated for a while now. You've got what you call the kings of capital markets, i.e. the big tech stocks, the FANGs leading the way. But then the vast majority of the rest of the market is really not doing very well. How long can this go on for, and what do you make of the way the market looks right now?
Yeah, it's a real concern, and more people are paying attention to it. We've been watching it for quite some time, as we've mentioned this a number of times. If you look at the S&P 500, the 500 largest companies in America, the top 10 stocks are up about a median of about 10% since year to date. Really 5 or 6 of them are up, 20 to 30%. The Facebooks, the Amazons, the Googles, the Apples, and the Microsofts. But JP Morgan's in that list as well, in that top 10, and it's down 37% year to date. So, those people say the stock market's going crazy, but really what's happening is you're not seeing the whole picture. 10 stocks are really up year to date, and 450 stocks are down between 3% and 38%. The bottom 50 stocks are down 40%. So what we're really seeing is the top stocks, not only are they performing super well, but they also trade at the highest valuations of all the other stocks on price to sales, price to book, price to earnings, price to free cash flow. They're all trading. And as you go further and further down the road, the stocks get cheaper and cheaper and cheaper. So it begs the question, is the stock market really overvalued, or are some stocks overvalued? I would argue that Amazon and Facebook and Google have very, very bright futures. So really, you could argue if things start getting better, 2 things could happen. Those big leaders could start to correct a little bit, or conversely, we could see those 450 other stocks that haven't really participated yet begin to really move higher. And that could propel the market significantly higher. I don't think that's going to happen in the short term, but it could, particularly if we start seeing this, virus that's getting out of control begin to show some signs of mitigation. But that's not happening yet.
So are you still fairly conservative and cautious and waiting to a large degree with a fair amount of cash to buy eventually, but just not right now?
Yeah, we are, because while we're thrilled that we own those 5 stocks that are up 30 or 40%, we're doing our homework and looking at the ones that are down 20 to 30% or 40%, making sure that they're good businesses that are appropriate for our client portfolios. But really, we're watching the macroeconomic environment, because we just don't know how long it's going to take for the balance sheets of businesses and consumers and governments to repair themselves from the massive bailouts that are taking place. The markets are thrilled about low interest rates. They're thrilled about all the Kool-Aid that's being thrown at them. But at some point, the piper's going to have to be paid. The longer this virus has its impact on the economy, the more damage that's being done. And so just because prices are going higher doesn't compel us to buy stocks that aren't doing well.